Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Wednesday, May 25th. This will be a technical analysis breakdown. So if you are somebody that uses charts within your trading, or maybe you're just interested in learning more about this tool and how it can be used to help make good decisions as a trader, then this will be a video for you. Real quick, before I get to the watch list, I personally want to invite you to get signed up for this free live online class here that I'm offering in a couple of weeks. So if you're enjoying what you see and you want to learn more about this tool, then certainly get signed up for the free class. If you're watching on YouTube, there's a link down in the description box. If you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you like what you see, then definitely get signed up for this free class. A couple of clarification points. First off, this number you see over here will still be changing around along the candlestick right here. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then next, I'll be using the 30-minute time frame. So for you beginners out there, what that means is that each one of these candlesticks, as they're called, represents 30 minutes worth of time. So stock number one here, GOVX. Talked about this one previously, so that's where these red and green lines are coming from. And the first little adjustment, now that we have more data, seems to be the new kind of key level of resistance moving forward. Going to be right up there at $3. You can see several times the price, got up around that area and could never quite push through. Now, I do realize that the one time it pushed through right there, a very nasty fake breakout before falling right back below it. And then, yes, it did try again, but that was the location where it ultimately got rejected back down. But what makes this, in my opinion at least, most interesting is check out how the price is now sitting right at this green line here, which I talked about previously as support. And not to pat myself on the back, but to pat charts on the back. So quick plug, get signed up for that free class. But I mean, check it out. Price was dropping. And then what a coincidence, right at that green line is where this, what would be known as a hammer candle, has started to form. Now, does that guarantee that for sure the price is going to bounce back up? No, of course not. There's no such thing as a guarantee. But does it become plausible? Does it become valid to start to think, okay, maybe a bounce is getting ready to take place? Yes, that is a more than plausible thought process to have. And that's the whole idea of a watch list, to find unique situations, to find situations that interest you, and then not to just randomly buy, but to watch and then see if they eventually behave in a way that fits into your personal trading strategy, where you can put a trade into motion. So overall, though, GOVX, very, very interesting level here with this pullback. Next one here, SNAP, Snapchat, very popular stock, very well known, and got absolutely destroyed today, which brings about, going to talk to the previous talking point, an interesting situation that's at least worth watching, because people like to buy stocks, and more specifically, popular stocks, when they get beat down, and that can certainly produce some very tradable movements from a dead cat bounce type perspective. So the level here that I think a lot of people are going to be watching and have done is put that trend line right in a place. So let me be very clear. I'm not trying to impress you. I'm not trying to imply that this is a great talent or this is some sort of secret discovery. The exact opposite. I assure you a lot of people have drawn that trend line. And I say all that because when a lot of people are watching the same levels, wondering the same thing, call it a self-fulfilling prophecy, call it whatever you want, it can produce some very dynamic movement. So while, again, nothing is guaranteed, is it plausible? Is it rational to think that if the price comes up here and then breaks up through that level, that break right there could create a nice little upside bounce? Yeah, that is a plausible thought process to have. Again, not guaranteed, so that's why risk management matters. But like I said, is that a valid thought process? Yeah, absolutely, especially, again, given the context that it's such a popular stock that got beat down in such a big way. You got to think even any shred of even slightly good, or maybe just bad news, but it's not as bad news, could, get this thing to at least bounce in the upside direction, which from a trading standpoint is all you really need. Next, GFAI, and this is a little tricky to talk about because there's a lot of perspective that goes into it. What do I mean by that? Well, if you're a day trader, flipper, scalper, whatever you want to call yourself, and you bought right there and your plan was to buy and sell within 7 minutes, well then yeah, from that perspective, the chart looks really, really bad. But if you care about the big picture point of view, I do realize that the price did pull back, but think about it from just a general standpoint where you have this area of support right down here at 70 cents. And I'm not saying the price will head down to 70 cents, but just for, example's sake, let's say it did and just bounced around that area. Now, emphasis here on big picture. From the big picture point of view, what would you still have? Well, you'd still have a set of lows there. You'd have lows there. You'd have lows down here. And if you envision each one of those as stair steps, what do you have? Well, from the big picture point of view, you'd still very clearly have stair steps progressing in the upwards direction. So 70 cents, definitely going to be an important level from the overarching standpoint. Again, I realize that if you're a day trader and you bought right there, then yeah, you really don't care about that 70-cent mark. But that's why I'm trying to make a big distinction between some sort of day trader versus somebody that cares about more so the big picture point of view. So yeah, today the price did pull back in the afternoon, but from the grand scheme, the uptrend is still intact. Next one, AMC, and overall a very rough day. Not necessarily because it was red, but because the price just absolutely demolished this previous support zone right here between these two green lines, which I've talked about quite a bit because it's been doing such a good job. But like I said, the opening 30 minutes, there's a slight gap down, and then check out the first 30 minutes. Just a huge, nasty red candle, and the price never really recovered from it. It tried to by going sideways for a little bit, but then you can see late afternoon, ultimately, made another move to the downside. So that support zone has been completely obliterated, and that brings up the first key update, which is, based on a foundation rule and charts, which states when levels of support are broken and closed below, they tend to act as resistance. So one of the newest areas of resistance with any sort of attempted bounce, now going to be right there at $10.85. As far as next levels of support are concerned, got to go back here a few weeks to locate the next key level, which sits down there right at that round number of $10. So $10 going to be that next key level where if it comes into play, a lot of people are going to be watching, not only because it's a technical area, but because it's just a big round number of 10. So for that reason alone, there will be plenty of people watching it. But yeah, overall, there's no doubt about it. Very rough day today. Next one here, BIMI, and let's just call it what it is. This is a very, very ugly looking chart, ugly situation. But for those of you longer time viewers, you've heard me say it before, there can be opportunity in ugly, but you better be disciplined. You better have risk management in play because you don't want to get caught in a nasty situation. But if you can be disciplined, then you can definitely structure some very interesting risk reward scenarios. And with this one, it's really all about this level down here at 55 cents. This was essentially the low previously, where the prices hovered around this area. And yes, this is very ugly, but it goes to the reason that, well, the price has bounced off this general area before. Now, don't get me wrong, just because it's bounced previously doesn't mean it's for sure guaranteed to bounce again. But also, that's not random. Nobody could accuse you of saying, why would you think it's going to bounce from that area? Because you can say, well, it's happened before. So like I said, if this thing gets that a little bit more ugly, come down to right around this 55 cent mark, once more, assuming you can honor stop losses, have risk management, if you do get the bounce, and it wouldn't even have to go all the way back up to where it was, but even half of that, a quarter of that, again, compared to what would be risked when you structure the trade plan properly, you'd have very minimal risk compared to a whole lot of potential upside. So if you like to play penny stocks, if you like to play these sorts of situations where things are looking really, really ugly, but maybe there is some opportunity in ugly, then I definitely get this one on your watch list. Now, this one will mean a bit more to those of you that watched a previous video, but even if you didn't, it still, doesn't really make a whole lot of difference. But I drew out this red line here at $1.40-ish as a key level of resistance, and check it out today. A couple of times the price got right up around that area, including the final 30 minutes, and has been rejected at that area. So going back to the talking point of self-fulfilling prophecy, so this is I'm not trying to impress you, and I'm not trying to imply that $1.40 was a great discovery on my part. A lot of people noticed that, and then that many more people have noticed it today, that twice the price once again got rejected. So again, guarantees, no. But valid, plausible, absolutely to think that if the price does come up to $1.40 and can get the break up through it, that break could create some good, solid upside buying pressure. So $1.40 is that key breakout point. Let's see if the price can indeed get that breakout or not. Next one here, NIO, and this was on the previous watch list. And for those of you that remember that one and watched it, I talked about that pink line there, the very famous, well-known 200-period moving average was a key level of support. And you can see, that was back on Monday. It did indeed act as support. But opening 30 minutes, price came down here, broke below it. So as I talked about earlier, just a traditional foundational rule in charting, when levels of support are broken and closed below, they tend to act as resistance. And check it out. You can't make this up. On the bounce, look right where the price got rejected. What a coincidence, right at that pink line there before getting rejected back down. Now, does that mean that the price can never break above that pink line again? I'm not saying that. I'm just saying that it makes sense why the price was rejected at that area, and that going into Wednesday, 1515 is going to be that initial key level of resistance, as that is the value of the current 200-period moving average. So keep an eye on that. And then in terms of levels of support, key level to watch moving forward, going to be right here at $14.40, which is behind my face right now. There we go. You can see that back here in the history of things behaved as support. And once again, so far so good. It is indeed watching as support. But if the price goes down to $14.40 and cannot hold, then the next key level of support would be that previous breakout area right there around $13.65. But yeah, all in all, a rough day. Next one, PLTR, and this was had a good overall trend to it, but a lot of these stocks, that opening 30 minutes just brutal. Came down to that trend line and then just smashed down through it. So at that point, That support would then be considered an area of resistance. And sure, it wasn't as exact as the previous stock, but you can see on the bounce up, got right in the vicinity of that trend line, which let's just call at $7.80. It got rejected right back down. So 780 will be that near-term area of resistance where if there is any sort of attempted bounces back in the upwards direction, then 780 will be that key level to watch. As far as levels of support now, first key level will be that gap close location, which I think is where it bounced off today. Yeah, basically right there at that gap close at 735. You can see right there is where the price bounced off it. So keep an eye on that if the price does come back down. If 735 does not hold up, then the next key area of support after that to keep an eye on would be right down there at $7.10. Next one here is Facebook. I probably should have put it at a different location within the watch list right by Snapchat because they're the same general philosophy that obviously Facebook, very popular stock, very well-known stock, got beat down today because of the Snapchat news. So it goes to reason that, a lot of people are going to be watching this and a lot of people are going to be potentially buying this. So it doesn't guarantee anything. And I know I've said that a million times, but I want to really reiterate, no such thing as a guarantee in the market. But just because a bunch of people are watching, it doesn't mean that for sure it'll keep moving up. But it does go to reason that, okay, it has been trending upwards all day long. So, that morning part of the day, it was, hovering around this area down here, and it changed that to green just to represent more so a bullish dynamic of things. But it has maintained up above that level. Now, you are going to have a lot of shorts, and, they're not being irrational, watching this trend line and think, if the price comes back down to this trend line and breaks down through it, it's time to get short. It's time to buy puts. Again, that doesn't mean that they're going to make money, but their thought process is right. Just as though your thought process from a long standpoint may be, well, I want to buy off that trend line. So both people are right. Shorts have a rational plan. Longs would have a rational plan. But that's why risk management matters, because somebody's going to be right, somebody's going to be wrong. So in my mind, that trend line is going to be one of those levels that a whole lot of people are watching. So keep an eye on that. And then as far as areas of resistance are concerned, interesting dynamic here with that trend line right there that's now being formed with that last 30-minute candle here. So keep an eye on that. And overall, though, for you pattern people out there, we have the support. We have the resistance. We have the big momentum move down. This would be known as a bear pennant pattern. Now, just because it's bearish doesn't mean that it's for sure going to go down, but I don't think anybody would be caught off guard if Facebook then did proceed further in the downwards direction over the next couple of days, but let's see what happens. Next one here, Tesla, TSLA, and did this analysis yesterday. Very tricky one to trade today. Chopped me up a couple of times. So I've had better days with Tesla, nothing severely damaging, but yeah, it was a challenging one to trade today and certainly needs to be updated here. So the first update I'm going to do is just actually drag this level down here because yeah, this level up there still pertains at 680. It's just not really relevant right now. The more relevant level from a resistance standpoint would be right there at $655. You can see a couple of times earlier on in the day, the price tried to get up through there and ultimately turned out to be a double top that rolled over. So keep an eye on that if the price does, display any sorts of signs of upwards momentum. And then as far as levels of support are concerned, the key level to watch that I'm curious about is going to be this trend line right here. Now, you are, of course, more than welcome to disagree with me, but in my analysis, to me, I think that trend line could start to come into play again and potentially present some good solid trade plans. But like I mentioned earlier, the idea philosophy of a watch list is just to watch it. So I'm not just going to randomly do anything at that trend line, but it is a level that I'm going to watch and see how the price behaves and potentially build some trade plans around. But point here being, those are going to be the two main levels that I'll be keeping an eye on for Tesla, and we'll see how it all plays out on Wednesday. So that wraps up the top 10. Again, if you like what you saw here and you want to learn more about this tool and how it can be used to help build consistency as a trader, then certainly get signed up for the free class. Like I said, it'll be in a couple weeks. It'll be on Thursday, June 2nd at 7 p.m. Eastern time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy this format, if you would like for me to continue to make these videos, then do two things for me, please. Hit the like button, leave a simple comment. Say hi. Tell me what you traded today. Tell me what you're watching tomorrow. But those two things communicate to me that you are enjoying. And as long as I know people are enjoying these videos, then I will continue to put in the time and effort to create these watch lists for you. So again, get signed up for that free class. Hit that like button, leave a simple comment. Everybody take care. Have a good one.